We're getting mixed signals from the market on this scary Friday the 13th. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, March 13th. We know that buying or selling a home can be very stressful and confusing. That's why we do these weekly videos, so you can understand how the market is affecting your options as a home seller or buyer. Starting off, we always like to look at how the market performed this past week. There are now 58 homes on the market, 6 more than last week, and the average asking price is roughly the same, $1,887,000 compared to the $1,910,000 last week. 2 fewer homes went pending this week compared to last week, but good news for our average price. The average asking price for those pending sales is up significantly, more than $500,000, up to $2,300,000, up from $1,070,730. And 7 homes closed this week, 3 more than last week, and again, good for the average price that's been falling lately, up to 1.9 for the average closing price this week compared to 1.7 last week. So, all right, now we know how the market performed this past week. And next we like to look at the market trends and indicators that help us determine where the market might be heading. Before we look at those trends, if you do find this information helpful, why don't you hit the subscribe button down below so you don't miss out on future updates. And while you're down there, why not share it with a friend too? Everyone deserves to be in the know about their local real estate market and how it affects them as homeowners or home shoppers. Okay, let's look at those indicators. Starting with the inventory, which rose again this week, we are now just 2 homes under 60. That is more than 1.5 times more inventory compared to the same time last year. Furthermore, we had 2 times more new homes on the market this week than we had go pending this week. That is an improvement from last week, but the pending sales really need to pick up to have any positive effect on the turnover rate. Speaking of that turnover rate, it fell back below that 50% line that I have marked here again this week. It is now at 42% of normal. Last year was a historically slow year with only 1.1, just over 1 house closing on average every day. Compare that to the average total sales in San Ramon that sits at just under 2 homes per day on a yearly average, or 1.9. You can see how that causes a problem for buyers looking for a home in San Ramon. There's just not a lot of potential inventory out there. This year is starting at a quicker pace than last year, with 20% more homes closing compared to the same time last year. So hopefully the higher inventory volume will start to reinvigorate the buyer pool and get them to start moving and make some offers on these homes that we have on the market. The over-under dipped back into the under range again, but it is basically a wash at just about 0.1% below asking. I mean, you can barely see that little dip below that break-even line that I have marked. Less than $2,000 under asking on average. With how slow the market has been over the past 12 months, maintaining anything in a 2% below asking price or higher is a good sign. It means sellers aren't being overly aggressive with price, and buyers are still willing to pay what a house is really worth because of all the positive aspects of that come along with living here in San Ramon. Speaking of buyers being willing to and able to spend a reasonable amount of money on a house in San Ramon, our average closing price has reversed its steep decline that we saw, past couple of weeks, and started to climb back up now. This week's average pending and closing prices indicate that the average should continue to climb for the next several weeks and settle back in closer to that 1.9 range or right around here pretty soon. The Triple Q fund fell less than 1% this week. Considering the war in Iran and the significant swings in the oil prices this week, seeing this fund basically maintain its value is an encouraging sign. Assuming the conflict does not last long, if the Triple Q fund can maintain its value, I think we'll see it have a strong rebound period in the market after this conflict. Unfortunately, the mortgage rates did not appear to be as unaffected by the war and the economic uncertainty that it's causing. Rates jumped up 11 basis points back to well over 6% at 6.11. This is mostly driven by the spike in oil prices, but as we have seen lately, mortgage rates are quick to jump up by double digits in the basis points and then take several weeks to creep down 1 to 2 basis points if it moves down. So not having an equal or opposite reaction. So even if the spike is short-lived because of the reaction to oil prices, I would not expect to see interest rates fall back below 6% for a couple of months, at least. We're getting a lot of mixed signals to start the year. On one hand, inventory is climbing rapidly, interest rates are starting to climb again, and the Triple Q fund is stagnant, if not dropping a little. All those negatives are mostly driven by economic concerns surrounding the war in Iran. On the other hand, we're already on pace to have a significantly higher total sales volume compared to last year, and the over-under number and average closing price is staying flat, as opposed to falling off with the rest of the metrics. At this point, I think it's safe to assume we will be in a weird, uncertain limbo for the next few weeks while we wait to see how long this Iranian conflict remains active. Thank you for joining me on this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button down below and ring the notification bell so you can know how the market is continuing to shape up this year. And if you have any questions about how you can navigate the stressful, confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and I'll see you next week with a new update.